The bear is back, people. The cocoa bear attacking the market in full force. But is the cocoa bear going to stick around? That's what we're going to talk in today's stock market brief. There were some very interesting supportive factors that could have helped the market today, but everything sold off, and that could be because bad news is once again bad news. At the end of the video, we're going to also discuss the zones. If you don't know what those are, something that I share with the Patreon group, I'll get into that later because there are some interesting things taking place in some of the sectors. Let's get into today's show. Welcome back. What's going on, everybody? The VIX was up. Everything was down on the day. Now, overall, if I take a look here at the 11 sectors, I want to point out something that I found interesting. Utilities, consumer staples, those are actually more defensive sectors. All right, so typically these do better in times of panic from a relative standpoint, but you can see that was not the case here. Utilities, consumer staples, and then also healthcare. Okay, those are more defensive. Now, technology was towards the upper 11 sectors, and also in the top 3 was consumer discretionary. These are typically on a lot of big red days, you'll typically see these towards the bottom. So this was an overall very interesting type of layout, which tells me, hey, is this distribution day? Is it a fake out for the bears? And are we going to start to see a rip? I mean, we did have some interesting stuff take place. The dollar was relatively flat. I mean, it was down significantly early on in the trading session, but it did bid back up to slightly flat on the day, okay? And overall, it's an outside trading bar, so if this thing starts bouncing up to the top, yeah, we could see some further downside there in the S&P 500. As we talked about on the prior episode, we talked about the negative correlation on the short time frame. It's back. Another supportive factor was taking a look at the meeting probabilities as far as rate hikes go. All right, you can see here, yeah, it looks like we're going to get in February, we're going to get a 25 basis point hike. In March, we're going to get a 25 basis point hike, bringing the terminal rate, right, to around, 475, 500 basis points. Now, look at how we'd be holding it till around July, but look what took place. Well, it looks like a cut, another cut, and then a pause, and then another cut. So typically when we see these drop-offs, we saw the market rally, but that was not the case today. What else took place today? Well, producer price inflation slowed in December. The headline PPI rose 6.2% year over year, which is down 7.3% in November. Okay, so another thing that came out was the United States industrial production month over month. Boom, that fell, right? If you take a look at it, it fell 1.6 to 1.6% versus the previous of 2.2%. And then U.S. retail sales took another slump buster of a hit right there. And then the Red Book obviously has declined there to 5%. So not the greatest look overall. You're probably seeing a lot of headlines about this economic reality setting in, these poor numbers, right? The U.S. retail sale, blah, 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 blah. Bunch of different articles was coming out. That was the data that really drove the order flow today. Tomorrow, on the 19th, we got a lot of stuff dropping at around 5:30, including building permits, Philadelphia Fed Manufacturing Index, we got housing starts, etc. Now, overall, if you take a look at the price action via Bookmap, Bookmap is software that allows you to see the order book. Okay, this is incredibly important stuff because if you're sitting there trading candlesticks and you don't understand where orders are actually hiding out and you're just using support and resistance, that's one thing. But to understand where orders are can really fine tune entry levels. So Bookmap, all they do is paint level 2s on the screen with a whole array of other products. But you can see here, there's a bunch of, early in the trading session, there's a bunch of orders here. It's a heat map, right? Bunch of orders here, 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 and then also here, here, and then here. And you can see these orders of liquidity were just completely absorbed throughout the day. So price came down, right? Boom, with some big red dots. That's cumulative volume delta. Delta volume, oh my gosh, losing it today. And then you can see big red dots and then small green dots up. Okay, and then as soon as this came down, it started bouncing when these orders popped up. And then we came down, big red dots, right? Boom. Those were absorbed. Okay, we saw a little bit of a bounce. These were absorbed. Big red dots continue to sell. Came in down to this area. Once again, all the orders were absorbed, but you can see knowing these levels can produce potential bounces. And that wasn't even the end of the day. This big order down here was 39.55. Okay, bounced up, right? Just small green dots, kind of got that little rip going, but then completely absorbed throughout the remainder of the day. So a lot of sell side. I wanted to bring this up because going into tomorrow, this is looking at ES, right? This is the close of business right here, boom. and you could see some orders popped up in here towards the end of the business. So I just wanted to call those levels out right here. It's about 3,900, okay, to the downside, and then up to the upside, you can see 39.87. So keep an eye on those levels going into tomorrow's trading session. If we take a look more specifically at the, and by the way, Bookmap offers subscribers to Figuring Out Money and Patreon people a discount. I have the link in the pinned comments. If we take a look at the S&P 500, it did get outside of its lower weekly expected move on this move. Now, on a prior video when we showed this, we said, hey, the probability of getting to 3,900 seems pretty fairly high because that has been this, magnet of a level where it acts as support, then it acts as resistance, and it's support, resistance, support, and now it's coming back into this area. It's just this complete magnet that price kind of takes from. So if we can start getting below that, that could produce some more sell side. Now, everybody and their significant other, mother, father, whatever, has been paying attention to this trend line. And what do you know? People are actually surprised that it held up, right? Shocking. So it has held, and we did see a distribution type day take place. Now, continue on. I want to actually show you what a 3-bar reversal pattern looks like. These are known as evening stars, right? Where you get this bullish green candle, you get a gap up, right? Small doji candle. It could be looking this way, could look this way, it could look this way, and then you have a big red bar that closes well beneath the original trading candle over here. Now, the reason why I'm showing this is because there are multiple variations, but that is a potential reversing type candle where you have the green bar. We didn't gap up. It pretty much opened matching highs, but it was still a small red body shooting star type candle. And then the next day, obviously huge volume came in, closing well through the prior candle low. So this to me is a reversal pattern. How can it be broken? Well, now, if you want to be a bull, we need to get price back through 400 on the SPY. Other than that, even if we bounce up back up to 397, this can still be, in fact, a play to see further downside as a possibility, okay? If we take a look at the SPY, on the 15-minute time frame, RSI is getting overextended, right? We've seen that before. Overextended can stay overextended for a while and continue to press up, okay? But it is getting on the shorter time frame overextended to the downside. We are below the weekly expected move. So don't be surprised, if we come down, right? If dynamic hedging really kicks into play, we can see a torpedo type move back into the chop box down here, which we've seen that explosive move from there, right? So we saw, I'm gonna just draw it a little bit more clear, all this, open interest building right here. We saw an explosive move out, back test, and then we started moving higher. So to see price action pull back within this area, it is also a high probability. It's also a high probability for price to just continue to doodle around for the remainder of the week around that lower weekly expected move. As it stands right now, we have price below an inclining 5-day moving average. So being that it's still inclining remains bullish. However, it's bullish with caution because price is trading under it. The longer it stays under it, remember, it could start curling back around. It could come up, come down, do something like that, crack down through like that, okay? So as it stands now, taking long shots is more dangerous than it would be if you were taking long shots on this pullback, long shots on this pullback, and so forth. So be warned here that, hey, if we start getting the 5-day moving average start to roll over, it could create some more sell side there in the weeks to come. All right, so that is something to pay attention to. If we take a look at the yield curves, take a look at the 10-year, 3-month, this thing continues to dive deeper and deeper. This kind of stuff is not good for financial stocks. And by the way, financial stocks played a huge role today in today's sell-side activity. It was down 1.87%. We saw Goldman Sachs, right, not looking too hot overall on their earnings. So we're starting to see some interesting stuff take place, right? On the original earnings day, and we're basically through that now for financials, but we saw JPM gap way down, Wells Fargo gap down, and then saw this algo, crazy price action to the upside. Well, those gains have been previously, recently are being wiped out. The 10-year and 2-year curve is at 69 basis points. Both of these are great leading indicators of recessions. And now we're starting to continue to see bad economic news. And typically when we saw that, it was good news for the markets. Today we're seeing it's bad news for the markets. So all we can really do if you want to be tactical and not narrative driven is really pay attention to what price is telling us. It was a strong move. We're below the 5-day moving average. So you want to see this start, this is more bearish now. It's not like I really would suggest shorting in the hole at this particular point in time. These are, dangerous times to do it, but on bounces, potentially, stuff like that could create good opportunities. But if we get back above the 5-day moving average, that could set up for more bullish activities there too as well. Now, the 10-year yield got absolutely crushed on all of this economic news. Perhaps can still see a bounce, right? We're getting below that 3.4% range or 34 on the TNX. Still positive divergences still there in the works too as well. If you take a look actually at TLT, it's bumping its head on that 200-day declining moving average, hanging man type candle, which could present itself as a potential topping type candle. So we'll continue to monitor that too as well. And this is important to pay attention to because if you notice, this big hit to the downside, right? And you take a look at the 11 sectors, right? Utilities, consumer staples, right? Even real estate down big on the day. These are rate sensitive. And seeing as how the 10-year yield got really crushed today might be one of the reasons as to, hey, this could be why these defensive sectors actually took a hit. If we take a look at the summation index still above zero. Parabolic SAR still in good shape as it stands right now. Same thing with the NYSE summation index there too as well. We still have over some bot conditions on a lot of these BP charts, but BP NDX still shows room to potentially head higher. BP NYA, so a broad market, is getting overextended. As we've been saying, BPCOMPQ also in overextended territory. Energy sector, overextended territory. Financials was in overextended territory, backing off a little bit. And then the technology sector is not too far off as well from that overextended territory. So a lot of these bounces came from oversold conditions, and now they're moving into overbought conditions. That's what it does. It rotates back and forth of these conditions. Now, I want to go show you my zones here because this is where I find it kind of interesting as far as, the 10-year yield that we just recently discussed. It is towards its lower end of the range. Okay, so it's saying, there's a 13.84% upside with 3.8% downside. It closed at 33.75. The low is at 32.46. Okay, so it's towards the lower end of its range. And while it took that big hit, take a look at what sectors are lighting up green: XLP and XLU and XLV. Okay, so those are the ones that got hit hard today, which could, if we are seeing more of a risk-off move, these could be opportunities not to go full bore, full long into, because I want to remind you that if the VIX starts cranking up to 28, 29, 30, everything can get hit. Okay, but the VIX is still relatively low as it stands. Okay, it was up like a 5% move today. So these ones could be opportunities to start scaling back into safety type positions moving forward. Now you can see a lot of the red was taken off of the board. We still have Bitcoin up there with a huge 16% downside. So we'll see what takes place with all of that. Any other big thing was the dollar. That's still towards its lower end. It's at it's 101.32, where the closing price currently was at 102.39. So this is interesting to me too, because if the dollar, like we said, starts moving up, that can bring other assets down, which is, something to pay attention to. If we do get a relief bounce, I would like to see it in more defensive names if we're going to continue to get a move down, because overall this move was very odd. If you like these type of updates, the zones, I give a lot more data in the zone packet that I actually share with my Discord. I still have to update the benefits here, but if you want to do that, I only charge $9 a month. It's not a lot at all. And you could, if that's even too much, okay, it's like $7 a month if you pay annually. I do the swing trade setups and ideas. I put some trade ideas out there. I give my watch list. Usually I'm more active on the watch list when actually the market is trending, which it's been a bear market, but I do trade ideas. I updated my watch list recently. I give expected moves for like 40 products, which I share some in here. And then obviously you get access to the entire community and so forth. And then I give obviously zones. And then I also have to update this, but I give like my stock market indicators if you like these, types of charts and all that stuff. That's all I got for you, everybody, on today's episode. Be careful, be safe out there, because price action, like I said, it's back beneath that 5-day moving average. It's inclining. Saw some crazy, wicked absorption within all the sellers today. Bad news is bad news. Buckle up, right? Volatility hasn't gone anywhere. We'll see if Cocoa Bear wants to continue this move. Otherwise, let's see the bulls step back up. See you later.